Hello and welcome back to Stock Market Weekly. I'm your host, as always, Evan Medeiros. This is the show that catches you up on all of the notable moves happening across financial markets through the lens of technical analysis. We publish every single weekend, 20 minutes or less. Make sure you do subscribe to the show. If you like it, check back in on the weekends. Let's get into it. Hope you're doing well out there. Final week of summertime wraps up and we have the scary month of September ahead of us. Before we get into this week's headlines, our sponsor, Investors Business Daily, we've got links in the description of this episode to their Market Surge and their IBD Digital subscription. Get yourself some new tools, some new research. I use them every single day with those links in the description of this show. Now, let's talk about the big headline this week was Nvidia. Earnings were out. Company reported some $40-50 billion of revenue, basically beating expectations. Jensen Huang was out there sort of giving a very rosy, optimistic, exciting picture of the future, as he always does. It's his job. It's every public company CEO's job to essentially be a salesman for the company. And all things said and done, the stock settled lower this week. Now, couple of things to take note of. Of course, we've got higher volume coming in this week. That's expected. We talked about the setup kind of coming into earnings picture last week, and we had, just a lackluster short-term price action setup here, right? From a trading perspective, we said, we don't really love the way this looks, but from a longer-term picture here, it still looked obviously fine. It's just off of all-time highs. All the moving averages are rising. Trends are up. Now that we have the earnings out and we've got some reaction, we can still sort of reaffirm our case here that in the short term, this looks lackluster, right? The stock was not able to power above this 180. It wasn't able to break out. And now it's kind of just hanging out here in between this 10-15 point range of 170 to 185 after having a big move. So I think the next couple of weeks here for Nvidia and where it moves out of this range, is it continuation pattern, or do we have to probe lower to find more motivated buyers to step into the stock? That's what we can pay attention to. So you've got a nice sideways orderly range here. This is something that I think all traders now can pay attention to, because this is going to set the mood of the market here. Semiconductors, Nvidia, of course, is the heartbeat of the AI trade right now. So I think your goalposts are pretty clear here. And I do think this, sort of spills over to the broad market on where we're going to take September. Pay attention to Nvidia, pay attention to semiconductors. I think this is going to be the little canary here to focus on. Now, from an investor standpoint, though, I was on StockTwit's Daily Rip Live with Katy Perry earlier this week, and sort of my takeaway here from Nvidia is that if you are a long-term investor in this company, if you came into the earnings report, you heard the earnings report, I really don't think anything changed for you. We didn't hear anything that was throwing a wrench or a full 180 in the build out, the pipeline, the expectations, all the demand that's here. That story seems to be secular and intact, right? So I don't think investors got anything different out of this earnings report. I think from a trader perspective, though, you definitely have some levels now that you can trade against. Here is the SMH. This is the Semiconductors ETF here. And again, you're getting just more hesitation here. This has gone sideways, started to, be a relative underperformer coming into July. And so for the last handful of months now, or not handful of months, handful of weeks, we have been moving sideways here, and it's just been kind of an ebb and flow pattern, and it's been mostly sideways with some good swings. Again, you did get some heavy volume this week. We did break this short-term uptrend. It does look like it wants to come back down and probe the lower end of this range. So semis here, they look like they're going to need at least some more time. They're going to need some more sideways here to get that price action firmed up a little bit. Again, the equilibrium has been in place, but now we want to see if we can start to move outside of these bands. these bands on the lower end are pretty important, right? So this is now the semiconductors going back to July 2024. This was the former peak in semiconductor SMH ETF. And really since 2024, we've been consolidating. We were in drawdown for, the better part of until just a couple months ago when we broke out. We were in drawdown from these highs. And so now this is this 280 level that we just looked at in the prior chart. And so if we start to break down, if we do end up breaking support here and we start losing the 2024 old all-time highs, I think you have concerns for a deeper correction and something that would take more time to heal. We're not there yet. Not saying that's the case that, is going to happen. I think we just want to be aware of the levels at this point, pay attention to sort of the 280 on the downside, and on Nvidia, it's 170 on the downside here. So traders alike, risk management, right? If you're a long-term investor in this, you can use options to hedge, or you can, do some different things to potentially mitigate the downside risk. If you're trying to be along for the longer term ride, again, the story doesn't feel disrupted on the long-term basis, but in the short term, we could absolutely have a little bit of a pullback, or dare I say correction here in some of these stocks. Now, in terms of index performance this week, it was mostly down. We had once again small cap stocks outperforming this week. I mean, it was a pretty lackluster outperformance, but the IWM did manage to close just marginally in the green here, and technology was again marginally the loser this week. S&P 500 index, probed higher for the week. And then on Friday, we saw this, kind of disruption here coming with a good sell day. And so we are starting now. I think we have a slide coming up. Yeah, we are starting now to, get a little messier than I would prefer, right? So the last handful of weeks, I've been pretty steadfast saying that the hardest trade is to stay long this market. This week, I'm sort of downgrading my excitement about the market a little bit. I do think there are some cracks forming. We do not know if these cracks will lead to bigger, I don't know what the analogy would lead to there. Erosion, right? Some more erosion in these cracks. If that happens, then again, I think like semis, we're going to want to be on the lookout. But for now, here's the small crack that we are observing now, and it's this S&P 500 Friday action. This Thursday, we pushed up to new highs. We got new all-time closing highs. We broke out, and then oops, on Friday, we sort of trapped all of those latecomers here, and then we started to move lower. This is very minor. This is subtle, right? But it's subtle after a few fits and starts. So if you just look back to this session here, when we looked at this right in here, we said, okay, we finally have the sellers. They got their chance to break this market down, and they did not. They immediately, lost control. We filled the gap. We grinded higher. We made new highs. Right. And then we started to lose control again. And last Friday was this big expansion bar. This was the Powell pivot. This was him kind of caving and succumbing to rate cuts that are very likely now coming later this month or later in September. And so the market got excited again. It broke out. And now this right here is another oops that is happening a little bit faster than I would prefer in terms of time. And so this is the one that has me just looking at it a little bit curious, saying, okay, if we find follow through selling next week, then maybe we do have the door back open for a 5% correction, a 7% correction, right? Nothing jaw dropping, but just a little bit of a reset. If we can find follow through next week and we stay below this 648 level, this prior highs right in here, and we stay, below today's highs on Friday, maybe you've got a little bit of a shot here at breaking this market a little bit further. So that's what I'm going to be paying attention to. There's some other signs that I'm looking at, we'll talk about maybe later in this video, that are showing some signs of at least a tired market that could probe lower. And so we'll want to be on the lookout. I put together this view. This is what everyone's talking about. So I've said, you know what, let's just give in and look at some seasonality here. I know this chart could be presented a little bit better, but this is basically the monthly returns of the S&P 500 going back to 2005. And what stands out here is just the month of September. Everyone seems to be talking about it, which is why I'm sort of, more inclined to take the other side of the trade. And this is exactly what we could be seeing, though, right? We could be seeing those nervous jitters here going into September, where September is seasonally just one of the weakest months of the year, right? Is where you usually see some of the pain and problems come in. Everybody's back from the summertime. The professionals are back and they just want to sell some things, right? So that's what we could be just getting in front of right now. And the market's on a little bit of a jitters, and maybe we are going to, reset earlier. The good news about September is, the rest of the year, provided things are, especially as you start the year and you're in a nice up year where you've got gains, the end of the year tends to end strong, right? So in some ways you can look at this as September being a buying opportunity, right? That's a way to flip the narrative. Yeah, maybe we'll see a little bit of weakness here, but maybe we will be able to finally get a little bit of bargain, prices on our favorite stocks if we're patient for the next few weeks, right? So that's just another way to look at it. But seasonality here, it's not the hottest. Here's the NASDAQ 100. This is kind of the midterm price action here. And this is, it looks like the semis, right? You just kind of got this little broadening pattern here of, a consolidation, but still just really not, you kind of just a dog with a chew toy kind of going back and forth here and kind of whipping its head back and forth. You're not really changing too much direction. You're creating some volatility here. The trend is broadly still up. We haven't broken any key levels, but it's just messy right here, right? So this is, again, just something where the Friday-Thursday duo action here in the Qs is not something I like. It came on a slight distribution day. The Qs never made it back to the prior highs, whereas the S&P 500 did. So you do have some relative tech underperformance. This isn't new. This is that Russell outperformance that we've been talking about. So NASDAQ 100 looks tired, coming into a difficult seasonal period in the market. Let's see if sellers can maybe break this market down for a few percent, and maybe they'll be happy. Everybody can win at that point. Give the bears something, right? It's been a romping stomping bull market since April. So here's the VIX getting a little bit excited into the weekend as well. It's a long weekend, so it does make sense. Again, adding to the jitters here into Friday. You've got a long weekend. Who wants to take exposure home 3 days going into September? So the VIX at 15.5. Again, pretty healthy level, just kind of resetting from, again, this increasingly grinding lower VIX here on each time it makes a new low. So, volatility, seeing a little bit of fear in there. Dollar index still sinking like a rock, broadly speaking, and 10-year treasury yields to their lows. They had a little bit of a rebound here, but finally starting to crack below that 4.25% level. And when we look at the IEF ETF, so this is kind of this is the bond fund that would essentially be the inverse of the 10-year treasury yields. This is looking like it wants to start to break here. You could argue that this has been in kind of a bottoming pattern formation since 2022. So, 2.5 years or so, we've been kind of carving out sideways. Interest rates haven't been able to move up. They tried a bunch of times, tried to break down, couldn't really do that either. So we're kind of at a decision point here where things are getting interesting. And so this could be a tailwind to equities into the end of the year again if we start to see the 10-year yield moving closer to 4%. So let's keep an eye on it. Again, lots of mixed currents here this week as we dissect the action. In terms of sectors on the week, XLE and financials were the strongest here. So up 2.5%. And almost 1% for financials. Staples and utilities, they were the hardest hit this week. In terms of breadth underneath the hood, this is our smart trend filter indicator. We still have 7 markets that are printing kind of bullish trend signals for us. So we like that. I mean, the breadth so far is hanging in there. Again, that's that small cap rotation, the broadening out story. Tough for mega cap tech, but good for lots of other things. Technology here in the neutral state, and in the bearish state now we have defensive of the market, consumer staples and utilities. Now, 52-week highs and lows, we had, again, kind of this broadening out that's been happening, right? And so last week, remember on Friday, we asked the question, would we, on last Friday when the market was breaking out, would it eclipse more than 200 highs this session right here? So you can see it didn't really get a new breath kind of thrust higher, new high here in 52-week highs, but it was, pretty close to this prior level. We're starting to see more stocks comfortably in the 150-ish level. That's good, right? That is good. So you're getting, again, the more smaller cap kind of average run-of-the-mill stock participating in this market. Percentage of S&P 500 stocks above a 20 SMA. You can see this has been rising, so that's encouraging as well. Put to call ratio, not too much to say about it. Bitcoin. So Bitcoin here is breaking that bigger 110 area that I've been talking about. So this has been more or less the line in the sand saying like, this is the spot we want to see Bitcoin hold above. We don't really want to start to see it break below this 110 because then it starts to lose some prior highs and it starts to get into messier territory. But here we are. So for Bitcoin, I do think, a lot of the different models that we run are producing some risk off signals now. So I do think you need to take the appropriate hedges or risk controls on Bitcoin here. I'm still a secular believer in the story, but it does seem like we are opening ourselves up to potentially a correction down to the low 100s at this point. So Bitcoin kind of on the neutral to negative list now for us. Dell on later this week also reported earnings. This took some of the wind out of the market here on Friday as well, and perhaps the AI trade. I think their numbers were pretty good. I didn't get a chance to look through the report too closely. I think they had a margins issue, but Dell is something you do want to pay attention to because, you certainly need the server space if you're building out all of these data centers, and so let's pay attention to this one. But from a price action perspective, getting a little bit of a thrust off of that upward trend. Financials, right? So you go from bad story to good story. This is kind of this yo-yo here this week where we were showing good chart data, bad chart data, good chart data. Here's the good XLF financials making new all-time highs on Friday. That's certainly encouraging and something you like to see. Gold, right? So gold, we've been beating the drum on gold all year long. It has basically been a slide in the deck pretty much every single episode. I didn't check the last, this was, an hour before the close. I probably took the snapshot on this chart, but this should have been an all-time high close here for GLD. That's a 4-month breakout, all-time highs. It's gone nowhere since April. April is when the stock market bottomed, and then, the stock market's been ripping, so who needs gold? Well, it's just been consolidating sideways, and volume's starting to pick up just a little bit as this starts to make new highs here. So watch GLD. I like it. I posted about it again. It's one of the largest positions I hold. I've had it all year long. And GDX, right? We're beating the drum about this one as well. It's really starting to accelerate to the upside now. This might be all-time highs, but I'm not entirely sure on that. But GDX led the gold breakout. Now gold's starting to break out. So those are some spots for you there. This is our short-term trading system. I wanted to push this in because one, I guess, to brag a little bit that it's having a good month. It's, depends on the environment, right? On when the short-term trading system really kicks into gear. But the reason I want to showcase it is because it is a short-term mean reversion trading system, and it does tend to get its act together and perform well when you do get some of these regime changes or you're at kind of a short-term turning point in markets broadly. So again, some of the evidence I'm seeing just from our own internal systems and algorithms are kind of suggesting that maybe this market just wants to kind of check down for a little bit here for the first couple of weeks of September. These are individual trades, so it's had a pretty good hit rate here. These are longs and shorts, but this is throughout the month on our Lamerick trading system. And this is its current exposure going into the weekend. And so I think I posted this. This is an update now on Friday, but I believe I posted this on Wednesday. It looked different, but it's 50% in consumer defensive right now. It's 38% cash, and it's got some short exposure on. So this is a pretty bearish, or at least a negative kind of tilt to the market here. It's not shorting a ton of stuff, so it's not like it has a ton of short exposure outright, but it's in the defensive areas of the market. This is a tech stock. I don't know why it's not picking it up. And then, holding some cash. So between these two things, this is kind of showing that, well, again, just some more evidence that things could at least get a little messy here, to say the least, in the market. Again, not outright bear, not saying it has to have some massive correction, just a little bit of a reset would be nice. Next week, we do have the big jobs report, right? We got non-farm payrolls and unemployment data coming in. That's going to be a super important report. Probably the most important at this point is unemployment. So that'll be next Friday. Markets are closed on Monday. And you get some JOLTS data as well, and some ISM PMI also. So it'll be, a meaningful week for economic data next week. So that's what I have. A little bit of a messier trading environment we seem to find ourselves in coming into September. Long-term trends, medium-term trends, they're still up, but there are some signs of cracking. Bitcoin looks exceptionally weak, but there's new Bitcoin treasury companies spinning up every single day. So I'm sure that BTC will be gobbled up sooner rather than later. And I think that's everything. So hopefully this video was helpful. Again, we've got links in the description of this show. Thanks as always for tuning in. We'll see you back here next Friday. Take care.